Okay, so you sent over some really fascinating material about these huge shifts in global economics, particularly, what China's doing with its monetary
Yeah,
strategy.
it's pretty compelling stuff.
Forget the sort of day-to-day trade war headlines for a second. We're diving into what some people are actually calling a new monetary war.
Mhm.
And the big question, really, is whether China's making a move now that kind of echoes a major mistake from their past.
Right, and that's what's immediately grabbed me about this piece by Mark Moss, China's second fatal mistake,
Oh.
the new monetary war. He makes this strong case that what's happening now, it's way bigger than just trade fights.
It's about money itself.
Exactly. It's about the very foundation of global finance, the future of it.
Right. So Moss is basically arguing, look, this isn't just haggling over tariffs, it's a fundamental contest for what money is going forward.
Yeah.
And his point is that China, despite being this economic giant, might be going down a path that looks familiar
Mm.
and maybe isn't the right one.
A potentially dangerous path, historically speaking.
So in this deep dive, we're going to break down that historical mistake China made with money,
Okay.
explore how that history might be, rhyming with today's situation, with this rapidly changing world.
With digital assets and all that.
Exactly. We'll look at their big bet on gold and then contrast that with Bitcoin and other digital assets popping up.
Mm.
Our goal here really is just to give you a clear, quick way to grasp these really complex issues and, what they might mean for global power down the line.
Sounds good. Where should we start? The history.
Yeah, let's unpack that first fatal mistake. What exactly happened back then?
Okay, so Moss takes us back to 1873. And if you look at it, it really shows how crucial monetary policy is for any country wanting, well, influence and stability.
Right, so 1873, the world's financial system is in massive flux.
Big time.
The big trend was moving away from using both gold and silver. That's bimetallism, right?
Correct.
And moving towards just gold, the gold standard. Most big players, Europe, the US, they made that switch.
They did. And this, according to Moss, is where China tripped up, because they had mountains of silver, essentially. They decided to resist this global tide and just stick with the silver standard.
Okay, now maybe that sounds reasonable on the surface. Like, we've got the silver, why change?
You could see the logic, maybe. But the fallout was, well, pretty bad.
How bad?
Well, because the rest of the world was valuing gold more and more, China's silver just became worth less internationally. Moss highlights a 30% drop in their national purchasing power.
30%, wow.
Yeah, think about that. Suddenly, China can afford 30% less of everything the world sells? That crippled their ability to trade effectively, to project power.
Ouch. Yeah, that's not just a blip, that's a huge economic hit. And it wasn't just money, was it? The article mentions global prestige, too.
Exactly. Their standing just sank. And because they clung to silver, it also meant they were really late adopting paper currency, not until 1933.
1933, that's way behind other major nations.
Way behind. It put them at a serious disadvantage compared to countries with more, modern, flexible money systems.
So the key lesson here, the takeaway from that period, is that sticking to an outdated money system basically pushed China to the economic margins for, decades.
Right. Moss uses that term peripheral nation to describe what happened.
Okay. That really sets the stage, then, for thinking about today. Because it sounds like Moss is saying history might be, well, not repeating, but rhyming.
That's the core of it, yeah. He argues the global system is changing profoundly again, this time maybe shifting towards decentralized digital stuff, like Bitcoin.
And that immediately makes you wonder, right? Is China making a similar kind of misjudgment now?
That's the question.
Because their big play right now seems to be all about gold. The article suggests they might even want a gold-backed yuan.
Well, at the same time, you see this explosion of interest, investment, and adoption around Bitcoin everywhere else.
So it's a stark contrast.
It really is. China piling into this ancient monetary metal while others are exploring this brand new digital scarcity.
So is China betting on the past while the future zips by in the digital lane? That's the worry Moss is flagging.
That's exactly the potential mistake he's highlighting. Prioritizing gold over this rapidly evolving digital landscape.
Okay, let's dig into that gold strategy more. The details in the article are pretty eye-opening. They've been the world's biggest gold producer since 2007.
Yeah, pulling about 15% of the world's total out of the ground each year. That's significant.
And the policy thing is really interesting, too.
Which part?
That they don't let any domestically mined gold leave the country.
Oh, right. Yeah, that strongly suggests they're deliberately hoarding it, building up internal stockpiles.
Which makes you look again at those official reserve numbers versus the estimates. Officially, it's what, under 2,000 tons?
Around 1,948 tons. Yeah, that's the official figure.
But Moss talks about estimates that are way, way higher, like 20,000, maybe even 30,000 tons.
It's a massive discrepancy.
Yeah.
And the argument is that this extra gold comes from, well, decades of that domestic mining staying put, plus actively buying it up internationally.
Where are they buying it from?
The article mentions activity in Africa, South America, across Asia. It suggests a very deliberate, long-term, quiet accumulation strategy.
So the picture is China is secretly, or at least very quietly, stacking up enormous amounts of gold, much more than they admit. And the logical next step, or the potential reason why, according to the article, is maybe prepping for a gold-backed currency.
That seems to be the potential endgame, yeah. A direct challenge to the U.S. dollar's dominance.
Using the historical stability of gold as the anchor.
Exactly. In a world where maybe trust in regular fiat currencies is shaky, a gold-backed yuan could theoretically look attractive, stable.
Okay, but then there's Bitcoin, the digital curveball. The article positions Bitcoin as like the next step in how money evolves.
Right. Moss lays out these 3 stages. First, you have collectibles. Think rare shells, beads valuable maybe, but not great for everyday buying and selling.
Okay, like fancy barter items.
Sort of. Then stage 2 is a store of value. Assets that hold their worth over time. Precious metals, fine art. Gold is the classic example here.
Gold fits perfectly there.
Yeah.
Got it. So what makes something jump to stage 3? A real medium of exchange?
It needs a checklist of properties.
Yeah.
It has to be portable, durable, divisible. You can break it down into smaller units, recognizable so people know what it is, and fungible, meaning one unit is the same as any other unit. Like $1 bill is the same as another.
And the argument is Bitcoin ticks all those boxes.
Moss argues it does. Digital means super portable. The tech is designed to be tough, durable. You can divide it into tiny pieces, satoshis.
Right.
It's getting more recognizable globally. And yeah, fundamentally, one Bitcoin is interchangeable with any other Bitcoin.
And Bitcoin has advantages over gold in this context, the article claims.
Yeah, a few key ones. Being digital makes it programmable. Think smart contracts, all sorts of financial apps you can build on it. And crucially, scarcity is baked into its code. There's a finite supply limit that can't just be changed. Gold is scarce, sure, but we can always potentially find more. Bitcoin has this absolute mathematical limit.
Like a limited edition digital print versus something you keep digging for.
Kind of, yeah. It's a different type of scarcity.
So China's loading up on gold, but the article says the West and others are moving towards exploring and using Bitcoin and blockchain tech.
It paints this picture of 2 very different strategies, 2 diverging paths.
Which brings us to the U.S. angle and the interpretation of Trump's trade policies. Moss sees more than just trade disputes there.
Right. He suggests it wasn't just random tariffs or trying to fix trade deficits. It was potentially part of a bigger play, a kind of monetary realignment strategy.
Interesting. So the pressure, the negotiations, they had a hidden purpose related to the future of money?
That's the idea presented, that the U.S. used trade leverage to get countries to the table, revise deals, and he notes that like over 50 countries, India, Vietnam, the EU, were apparently willing to negotiate under that pressure.
But China wasn't really playing ball on that front. They pushed back with their own tariffs.
Exactly. They resisted. And connecting that back to the money situation, the article floats the idea that the U.S. might be gaining an edge, not just through trade talks, but by sort of encouraging or at least allowing the infrastructure for digital finance to grow.
By fostering innovation in crypto and blockchain.
Potentially. Positioning itself to lead the next financial era, maybe.
So wrapping this all together, the article's big warning is this rhyme of history. China potentially repeating its 1873 mistake.
Yeah, betting heavily on gold, a past monetary system, while potentially missing the boat on the digital revolution.
That's the core thesis, isn't it?
It is. Moss argues the next monetary superpower won't necessarily be the one with the most gold bars, but the one that embraces and leads in digital innovation.
And the implication is pretty stark. A possible reshuffling of global influence. The U.S. may be regaining ground through digital finance.
Well, China risks getting left behind again, economically speaking, if this analysis turns out to be right.
Yeah. And for anyone listening trying to make sense of global economics, It really shows you need to look past the daily headlines.
Absolutely. Look at the deeper currents, the fundamental shifts happening with the nature of money itself.
Okay, so quick recap of our deep dive. We looked at China's big historical money mistake back in 1873,
Uh-huh.
the eerie parallels possibly playing out now with the digital shift,
Right.
their massive, perhaps underestimated bet on gold accumulation,
Versus the rise of Bitcoin as this potential new form of money.
and what all this might mean for geopolitics, for who holds influence going forward.
Which leaves us with a final thought, maybe, for listeners to chew on.
Go for it.
Well, considering China's got all this gold, maybe, and you've got this growing global momentum behind digital assets, what does the future of the global monetary system actually look like? What's the most likely path? And, what's the big surprise that could totally change things in the next few years?
Definitely a lot to mull over there. Hopefully, this deep dive has given everyone a clearer picture of a really complex but super important global dynamic, some insights beyond just the standard news takes. Thanks for digging into this with us.